Ladies and gentlemen, good morning and a warm welcome to HansaMatrix Investor Conference webinar about financial results and company's activities in the second quarter of 2019. Today we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO Mr.Macijevskis. As always, we will start with company's presentation, after which we will proceed with the questions and answers session. If you have any question that you would like to ask to company's representatives, please use the question box on the right side of your screen. Ilmārs, I invite you to start the presentation.
Eva, thank you for introduction, and hello everybody who decided in this nice sunny day to join maybe a little bit boring but probably interesting a webinar from HansaMatrix about Q2 and 6-month results. So presenters are Ilmārs, myself, and Māris will follow me. So as usually we start with very brief executive summary. 2019 business trends. What we are seeing is improved competitiveness of East European suppliers in US because caused by recent increased US tariffs on China manufactured electronic circuits. Increased the same time this is trade war which has also negative impact on business development. So both effects are in balance, and it's very big uncertainty how they will develop. Another business trend is increased investments in EU on 5G networks. That will positively affect the future sales development. In 2019 Q2, HansaMatrix already started to supply electronic circuits for 5G network base stations. And there will be one answer at the end of presentation regarding this topic. Recent global electronics component shortages are coming to the end. What the influence, the reason for that is that there's slowdown of more smartphone sales in global markets, which was the biggest consumer of MLCCs, which is multi-layer ceramic capacitors. Also experiencing faster than maybe than forecasted before, salary inflation in Latvia, and also generally in region, East European region. 2018 year-to-year salary inflation reached 8.4, and also consensus for this year stand approximately on the same level. I go proceeding with Q2 summary. As we are planning and with executing the business, quarterly turnover is growing, and Q2 we reached historically highest quarterly turnover, comparing 15% up from last year Q2. EBITDA year-to-year slight decrease by 1% comparing to year before. 2019 Q2 net profit slightly negative. Main influencers are influenced wage inflation, European Investment Bank loan, remuneration provisions, and losses from investments in associates. So basically we are having a minus 0.5 net profit for this quarter. 2019 Q2, as usually we do comparison with peers on the markets. We've been ranging companies by EBITDA margin. We are in the second position here. And second position here, one of the highest earners in the market, still within our range, above 15%. And value range is 4.2 to 12.6 per market, and EBITDA where HansaMatrix is very low currently, low trading, only multiplication 3.4 times EBITDA. So it's a good time to buy. Q2 results of 2000 in detail, it will be presented by CFO Māris. So Māris, please proceed.
Thank you, Ilmārs. Hello everyone, this is Māris, CFO of the company. So in the second quarter of this year, the company sales amounted to almost 6 million, which is 15% increase as compared to second quarter of 2018 and 1% increase as compared to previous quarter, quarter one of 2019. In terms of turnover, this quarter was successful. It was historically highest company quarterly turnover achieved. So in the second quarter of this year, three main regions to which manufacturing services are provided were Baltic states with 43% of total, Nordic countries 28% of total, and other EU countries also 28% of total. Services provided to the companies outside European Union this quarter was in small amount, 1% of total. This quarter, sales to Baltic and Nordic clients increased, but the rest of EU and outside EU sales volumes decreased on year-on-year basis. Next, moving to market sectors. In this quarter, two main sales sectors were data network products with 44% and industrial with 36% of total sales. Internet of Things, optics and other product sectors are comparably smaller than these two, respectively 5% and 8%. So in second quarter of this year, data network sector decreased on year-on-year basis, but all other sectors indicated quite strong growth on year-on-year basis. Profitability results, as you can see, the EBITDA was 960,000, slightly 1% down on year-on-year basis. So it was a small loss of 54,000 for this quarter, and EBITDA margin was at 16% level, mostly determined by the higher added value product proportion in sales. Next, 6 months aggregated results of this year, so that the turnover achieved was almost 12 million euros, which was 7% growth on year-on-year basis. Also, this half-year turnover, as you can see in the chart, was historically highest if we look starting with 2015. Then sales by the region. Two main regions, same as in the quarter, are Baltics with 43% and Nordic countries with 29%. The rest of EU 24%. Most of the regions were growing on year-on-year basis, except the rest of EU sales. And also, as could be observed in the chart, all three key regions in the long-term historical perspective, starting with 2015, exhibit a significant growth trend. Next, 6 months sales by market sector. Two main product sales sectors are data network and industrial products with 44% and 35% of total sales. Internet of Things, optics and photonics and other product sectors are comparably smaller than these two, respectively 6%, 7% and 8% of total. In 6 months of 2019, data network sector decreased on year-on-year basis. However, all other sectors performed well and increased on year-on-year basis. And also, historically, if we look at the longer term, then data networks and industrial sectors, you can see a nice growth trend, as well as optics and photonics products have grown significantly if we look at the date starting with 2015. Next, 6 months profitability results. EBITDA achieved was around 2.1 million, which is a 3% increase compared to 6 months period of 2018. Net profit result was 146,000 euros, which is 84% down on year-on-year basis. Then EBITDA margin was 17.5% and net profit margin was 1.2%. Well, EBITDA margin was influenced by comparably high share of higher margin products in production, and also by introduction of IFRS 16 regarding lease liabilities and assets, which increased asset depreciation and in turn EBITDA by around 260,000 in this period. And both EBITDA and net profit margins in 6 months are influenced by significant wage and salary inflation. And as Ilmārs mentioned, decrease in net profit margin was influenced by EIB financing, cost provisions, and losses in associated companies. And then if we move to TTM, trailing 12 months results, you can see that turnover achieved was almost 22 million euro, which is 2.4% up on year-on-year basis. EBITDA for TTM 12 months period was almost 3.4 million and net profit 0.1 million euro, which both have decreased compared to TTM sales result of second quarter of 2018. EBITDA margins for these periods were respectively 16 and 2.7%. These margins were influenced by wage and salary inflation and also by less successful financial results in fourth quarter of 2018. And this is about results in detail all. Then I give floor to Ilmārs.
Yes, hello. Yeah, thank you, Māris. And updating, I'm taking through the rest of the presentation. Other activities, research and development turnover. 2019 Q2 R&D B2B sales reported 0.58 million euros. And as we had questioned last time, approximately part of this is manufacturing of the R&D products to the third parties, and about roughly 40% is services and products built for associated companies. So which is the amount of R&D sales is increased 80% comparing to year-to-year basis, and it achieved 9% share in 12-month TTM consolidated sales. Investments during the second quarter. So significant investments are done, second quarter investments are 1.18 closely 1.2 million euros in already scheduled investments for this year. 6 months accumulated investments are 2 million euros, mostly production capacity increase, introduction into new production technologies. During this period, also during this period, HansaMatrix Group received 400,000 euro leasing financing for technological equipment purchases from SEB Leasings. All leasing financing was received in Q2 2019. Most significant investments in the period is additional productivity, additional NXT3 assembly modules, kind of building new prototype assembling line ready in Ventspils plant, and also some additional equipments like screen printer, router, and some other equipments needed for executing IPC class 3 production. And some of that is Q2 and most of that is first half year investments. During the same period, HansaMatrix made investments in associated companies, all those are scheduled, also announced beginning of year. HansaMatrix made 2.3 million euro investments, out of which 879,000 was Q2. In Lightspace Technologies, to finance development commercialization of 3D display technologies, largest part of investment went into two new production technologies that are required for increasing screen size for 3D displays up to 27-inch size. So that will be available later this year. Also, 245,000 euros were invested in company Zinātnes in our industrial park company, just to accomplish a technical project and prepare for a construction site, out of which 169,000 euros in Q2. So also due to requirements of improving capital situation in Zinātnes parks, HansaMatrix increased capital participation to 74% by paying up newly issued 200 capital shares in amount, basically converting investment. Converting already existing convertible loan into investment. So amount was converted was 654,000 euros. A little bit about business development of Lightspace Technologies. During last 6 months, there was quite substantial steps were stepped into market. If you remember, at the beginning of year, Lightspace announced new technological development for AR and VR headsets, like photonics technology, to be able to build multifocal headsets. And during this period, 2 global tier 1 OEMs, probably largest players involved in this sector, have chosen to build concept VR AR prototypes using Lightspace technology. This is kind of first step into introduction of technology. In August 2019, we received installed vacuum coating line to enable larger size multiplane screen manufacturing in Lightspace Technologies daughter company Eurocities. Also, big achievement is that one of the global display manufacturers have chosen Lightspace technology to build new generation 3D displays. For the fact that these agreements are confidential, we cannot name any of those tier 1 companies here. Going other events reporting period. On May 31st, 2019, company paid dividend of the 2018 profit in amount of 73,000 euros or 4 euro cents per share. Events that happened after reporting period. As you maybe noticed, on August 8th, the shareholding of Macro Riga in HansaMatrix has decreased by 15% to 34.03 in a transaction where Macro Riga repaid shareholder loan to HansaMatrix with HansaMatrix shares owned by Macro Riga. This was done according to commercial law to settle outstanding debt. On August 12, a new shareholder or new investor in company, Zegai Capital, managed fund Zegai 4, has become 15.06% shareholder of HansaMatrix by purchasing these shares from HansaMatrix. As a result of this transaction, the investor has invested 2 million euros in HansaMatrix to enhance company growth and competitiveness. And also this kind of this is connected to the first transaction. So Macro Riga has reduced substantially also shareholder loan to company. Questions and answers session. We have submitted several questions that have been answered into presentation, but Eva, maybe you have some questions.
Yes, Ilmar, we do have two other questions. Would you like to start with the ones that have been submitted before?
Yes, I would.
Mhm.
So I'll proceed with the submitted questions before webinar. We are answering as usual them in written format, additionally to this webinar presentation. So I'm reading them now. How has business environment developed in last 3-4 months? How these changes are impacting company results? I would say last 3 months there was no new changes of the business environment. As we mentioned earlier, U.S. import tariffs on China products put Eastern European manufacturers in competitive position for U.S. market. At the same time, global business uncertainty created negative effects. In global market, it's actually complicated. That slows down some business processes. It's complicated to predict how both effects combine. One fact that's actually going is increased investments if 5G networks will positively affect future sales development. In 2019 Q2, HansaMatrix already started to supply electronic circuits for 5G network base stations. Second question was submitted. How it is planned to improve profitability? Does company have any pricing power to transfer increasing personnel costs to clients? I have to say that the company has had the plan how to compensate for increasing costs already for last 5 years, because process is not new. Only what's different right now that if you were expecting to be salary inflation in a range of 5% a year, for it was within 5 last a few years backward until 2017 or in that range, but since 2018-19 it goes closer to 10.5. So our plan for several years been to compensate for increasing costs caused by salary inflation, first by investments that are focused to increase productivity of each worker, just to add productivity to compensate that. Partly cost level can be transferred to customers, but not immediately, because we are having some price agreements that cover certain time period, like 12 months or some length of some projects that are started. Of course, for new projects, we are able to use slightly different cost base for calculating pricing. And again, saying that this pressure, like salary inflation, is less sensitive for high complexity products and it's more sensitive for simple products. HansaMatrix always been keen to to focus more on high complexity product production. So I would say this is not so painful for us, maybe this process, but nevertheless it requires some attention, and we have a plan to compensate these costs. A third question: are any new significant customers recently? After Q2, I can say that from Q3, company has started to ship products to 2 new customers. One customer is Human Machine Interface Industrial Products Company, where we expect yearly turnover for that customer could be in the range an additional 2 million euros. That's professional customer in EU. And early announced a contract that we signed with customer outside the EU also starts to ship Q3 this year, where we think around to be split across 2.5 years. So in average, early amount would be affected positively by average 1.3 million euros. Also, we are having 2 more medium-sized accounts currently in discussion when to start business with customers from Nordic countries. So yes, we are having some new significant customers coming into our list. Any longer term changes in product mix? Question number 4. As we also having always said that the new more complicated products come sometimes come with high cost material or as we call bill of materials that's used for production of those, and not always this added value is kind of has any proportion to the directly proportion to how expensive materials are. Sometimes you have to start to produce new products where maybe you are doing not so much of added value to those products, but your materials are relatively high cost. So I would say long-term changes will be this. We will have more maybe medium margin products and medium lower margin products in our portfolio than we currently have. In other words, that sales turnover will grow faster than EBITDA, which is actually cash we are generating into from the operation, but both will grow. So yeah, exactly any forecasts here is very hard to say. So and only we have some idea maybe of coming year, but not very long term. Coming to question 5, judging from the second quarter financial report, it seems that HansaMatrix has started to develop 5G technology. How much income from the total revenue do you expect 5G technologies to bring HansaMatrix in nearest quarters? What we see currently that there are some new products started coming that we are manufacturing exactly for 5G. We could safely presume that about 10 to 15% of our product sales with the time could be 5G related in very nearest future and also in further future. So we don't want to also not be so much dependent of how to say campaigns, investment campaigns, and have contingency for them. So we of course working for diversification of portfolio to have more different directions represented in our turnover. So we're talking about 10-15% here. So that covers 5 submitted questions. Eva, can we now look at questions that are submitted during the webinar?
Sure. So we have 3 more at this moment. Let's start with the first one. In second quarter, gross margin of 12% and IFRS 16 adjusted EBITDA margin of 14.1% are the lowest figures in many years. Please describe the main factors negatively impacting these margins in second quarter.
Of course, very much. It kind of very, as I said here, answers were given through this presentation that there is wage inflation. Exactly this year we have to raise salaries 2 times already by certain percentage, and that's kind of one effect. Another effect, we are starting new projects, investing in new technologies, which means that we have to recruit new people who learn them, who start to use them, but expected business comes not immediately. It comes with some delay. So we have to take upfront costs, and they actually are coming as a cost today for the maybe next period business. That's from other hand, adjusted margin 14.01.1 is still something we've been forecasting as a guidance for next period business development. As you remember, our forecasts are 12 to 15. So this is nothing wrong here. Of course, the fact that we investing in a future growth also takes some cost immediately. So that's maybe an answer. From other hand, if you look in absolute figures, that even having like margins maybe not very strong, then this is in absolute figures. They are growth in growth. If you especially looking many years backwards. Yeah. So these are the factors. Yeah.
Thank you. Can you give any updated guidance regarding expected timeline of light space product developments that will be ready for scalable production?
Yeah, we are trying to inform about how we're proceeding with our technology and products. Currently, this year, what was planned for this year was to upgrade our production capabilities so we can start to produce 27-inch screen panels. That was prerequisite for having being able to build commercial products based on volumetric screen technology. So we have a roadmap which shows that in March next year we should be having first 27-inch devices in prototype phase. In parallel, we're working on AR, VR devices like headsets that we started December last year, built first prototype. For these products, we are kind of ready with production already today, and we are going through development cycle. So we believe we'll have first prototypes end of this year, and having maybe 6 months later some commercial projects already based on them. So we believe we'll see first steps next year.
Thank you. Currently, the last question that we have received, in terms of PCBs for 5G networks, how big volumes could we talk about? And with PCBs, I mean, it's printed circuit boards.
Yeah, I believe it's printed circuit. Yeah, thank you for the question. As I say, it's there are some specific products we manufacture for 5G networks. That's electronic circuits for base station filters and some equipments. And so in number of devices that each these devices are are customized, and they are needed in the corresponding number. How many base stations are converted or added 5G capabilities? So it's maybe not a situation what we had with the 4G and 3G products, or situation before when we manufactured big amounts to update full network immediately. 5G is rolled out in some areas, so here we expect much more a slower process. However, because of the high value of those products, this is what you're talking about. In sales, like in turnover wise, it could be 10-15% of product sales related to this application.
Very good, thank you. It seems we have managed to answer all the questions that were submitted. We have recorded this webinar, so for those interested, the recording will be available soon in Nasdaq Baltic YouTube channel and also in company's announcements. Participants, thank you for joining. Ilmār, Māri, thank you for holding the presentation. See you next quarter.
Yeah, thank you for participating, and thank you for asking questions, and we're happy to answer them. Yeah, so have a nice day. Bye.
Goodbye.
Bye.